Inflation declines backwards. Are there reasons why? Is it a bubble or a reliable measure to end this crisis? Lower oil prices led to lower gasoline prices in the United States. Although the gallon price level varied from state to state, but the overall indicator was a clear decline. The slowdown in home sales has led to a decline in the previous period's home sales index since last February. Although the decline is not very clear, but also contributed to relatively low inflation. Food prices also fell. Perhaps not as low as the price of oil, but also had an impact on inflation breaking from its peak. Recently, in Istanbul, a preliminary agreement was concluded between Russia and Ukraine, which was to open a Ukrainian grain corridor stuck in ports and prepared for export. Thereby reporting the shipment of more grain from Ukraine. The employment sector that has been vibrant did not seem to be affected by the contraction of the U.S. economy since the beginning of the year. This is good when we put it together with the inflation breakdown indicators, especially with an unemployment rate of 0.1% lower than the previous month. All this is good and optimistic data, but what about the other side of the coin? Is the world on the brink of inflationary recession, or are previous indicators capable of solving the problem? Bankers and investors may see another picture. For example, the yield curve in Treasury bonds has widened. Bonds and the yield on bonds rose as they were in bonds for 2 years to 3.24% and in 10-year bonds to 2.84%. This heralds a recession in the next 2 years, not to mention that the widening reversal in the yield curve continues to increase slightly, and this is perhaps another measure used by bankers to overcome inflation. Since December, the Bank of England has started fighting inflation by raising interest by a quarter point or less over 6 consecutive meetings, but recently raised it by half a point, causing a major economic jolt. At the economic level, this is not a cause for optimism, although none of the world's crises have announced their imminent end. There is also an additional political crisis striking in England, where Prime Minister and Conservative leader Boris Johnson has been forced to resign. We also see clearly that the conflicts of events occurring in the world are encouraging, and the contrary is the case. Although the federal bank refuses to hand over a recession, but reading of events indicates the opposite. But let's look at things from a different angle and more saturated with hope. What, for example, if inflation continues to decline gradually, even at a slow rate, while maintaining the employment index without decreasing? The long-term occurrence of this will inevitably lead to the growth and recovery of the U.S. economy, which could help the Federal cut interest on the dollar. Opening a cereal corridor with Ukraine is also a positive turning point in the food problem that has begun to hit some countries. This is on a social and living level. So what about the investment level? One of the great rules pointed out by billionaire Warren Buffett is buy when everyone sells and sell when everyone buys. Does this have anything to do with what is going on in the world? Before that, is this the world's first crisis? How can I take advantage of this crisis to achieve what cannot be achieved at other times? That's what we'll answer for in the next episodes. Follow us.